File in this April 5, 2018, file photo, a sign for a Wall Street subway station is shown in New York. The U.S. stock market opens at 9:30 a.m. EDT on Monday, June 25. AP photo, Richard Drew, file, Singapore, AP, Asian markets were mostly lower on Tuesday, as moves by the U.S. to gain an upper hand on trade with China weighed on the technology sector. Tech stocks have been the pillar of the Wall Street's long-running bull market. Keeping score, Japan's benchmark Nikkei 225 index dropped 0.5% to 22,221.33 and South Korea's Kospi lost 0.9% to 2,337.60. Hong Kong's Hang Seng shed 1.2% to 28,619.21 and the Shanghai Composite in mainland China slipped 0.6% to 2,842.22. Australia's S. Taiwan's benchmark fell and Southeast Asian indexes were mostly lower. Wall Street, major U.S. benchmarks finished broadly lower. The Dow Jones Industrial Average fell for the ninth time in 10 days, losing 1.3% to 24,252.80. The Nasdaq Composite shed 2.1% to 7,532.01. The Russell 2000 index of smaller company stocks slid 1.7% to 1,657.51. Tech downturn, stocks tumbled on reports that the Trump administration plans to limit exports of some high-tech products to China, and also limit investment in technology firms by companies with substantial Chinese ownership. Treasury Secretary Steven Mnuchin's suggestion that the investment restrictions wouldn't be limited to China caused stocks to slide further. The market recovered when Peter Navarro, one of President Donald Trump's top trade advisors, told CNBC that there was no plan for investment restrictions and that the administration's probe into alleged technology theft is limited to China. All but one of the 72 technology companies listed on the S. Efforts to secure a pole position in trade are seeing some hitback. Iconic American motorcycle maker Harley-Davidson said it would move some production overseas to avoid tariffs the European Union is placing on motorcycles made in the U.S. Those tariffs were a response to taxes the U.S. placed on steel and aluminum from Europe. In less than 2 weeks, a 25% tariff will be imposed by the U.S. on billions of dollars of Chinese products. China will also raise import duties on $34 billion worth of American goods. China and the European Union agreed on Monday to launch a group that will, among other things, preserve support for international trade amid U.S. threats of import controls. Analysts take fears that China may pull investments in U.S. tech firms have caused a broad drawback. There is a sense that trade tensions could be long-drawn and somewhat more antagonistic going forward, said Vishnu Varathan, head of economics and macro strategy at Mizuho Bank. Energy, OPEC countries have agreed to raise the supply of crude oil by 1 million barrels a day. But investors aren't sure if the cartel will carry it out. Benchmark U.S. crude gained 7 cents to $68.15 per barrel in New York. It dipped 0.7% to settle at $68.08 per barrel on Monday. Brent crude, used to price international oils, rose 5 cents to $74.60 per barrel in London. Currencies, the dollar remained at 109 yen and 45 cents from late trading Monday. The euro strengthened to $1.1718 from $1.1704. AP Markets writer Marley J. contributed to this report. Copyright 2018 The Associated Press. All rights reserved. This material may not be published, broadcast, written or redistributed.